Many thanks, Barbara. I'm very happy that you mentioned the G8 meeting in Italy, because at that time I was also representing the German government and KfW at this meeting, and I was always criticizing the meeting because we were continuously discussing on the private sector instead of discussing with the private sector. And I mentioned that because without a tough and a really comprehensive dialogue between the public sector and the private sector, we will not forthcoming with the infrastructure needs in Africa. And at the same time, since I'm the chairman of the European Development Finance Institute, I will elaborate a little bit on what we are doing and how we are seeing it. As the European Development Finance Institute, we have a combined portfolio of more than 26 billion now, and 1/3 of this is invested in Africa, and 1/3 is invested in infrastructure. So it reflects very much that we see Africa, our neighboring continent, as a continent of opportunities. At the same time, also we see that infrastructure is a real need. And we see a lot of opportunities in the power sector, because Africa is starving for power, and at the same time also for, let me say, all the facilities which are needed to help African entrepreneurs to reach a competitiveness which allow them also to be integrated in the global market. So whatever is needed, railroads, port facilities, and so on, this in our view is extremely critical. What we have seen over time is that now there's a growing recognition of the role of the private sector. That's good. We also see that there are a lot of better investment climates in most of the African countries, which is also very good, because this gives private sector also then incentive to look very closely to the business of opportunities in Africa. And we have also seen over time better structured PPPs. What I mean with better structured PPPs, to some extent, PPPs are always structured by the governments, but not with the aim to include the private sector and make use of the competence of the private sector, but mainly because they feel that there is a financing gap and the private sector should come in and to fill this gap. And this will not happen, because nobody in the private sector will come in simply to fill the gap, the financial gap, without having the opportunity also to make a profit, which enable the private sector also to take care of the huge risk he's taking. So this once again requires that we need this kind of dialogue. But there's always a but. I think we still are faced with a lot of challenges, especially when it comes to regional integration and regional infrastructure, because it is difficult to imagine, although I see that some of the private sector people, they are trying to do that, to deal then with 3 or 4, 5 different governance involved in a particular infrastructure project. This is too complex, the transaction costs are too high, and the risks are also extremely high. And this is why I like to encourage the regional economic communities, also the African Union. They have to play a role when we have to structure these regional infrastructure projects. The second but is that we should also understand that infrastructure is not an aim by itself. Better roads, better railways will not improve the competitiveness if we do not remove these non-tariff barriers we have seen in Africa. We as DEG, we have an equity stake in a company in Tanzania which is called Prime Fuels, and they run 160 trucks and locomotives. And I know from them that it takes the trucks days to cross the border. And you can improve the infrastructure, but if non-tariff barriers are not removed, then we will not increase the competitiveness. The second I would like also to remind ourselves is that when it comes to the power sector, we in most of the African countries we are confronted with not so much enabling environment for the private sector, especially when the private sector needs to deal with the public sector by using the transmission and the distribution network. So from a private sector perspective, reducing risk means that decentralized power projects are much more easier to structure by the private sector, because by doing that we we are providing a direct power supply to industrial companies, to industrial estate and so on, so avoiding to deal with the public sector. And I mention that because I still believe that the World Bank can play a crucial role, the World Bank Group, to be fair enough, that MIGA, for example, and I hope that Michael will elaborate a little bit on that, that they can provide guarantees which help then the private sector to reduce the risk dealing with these kind of projects. But at the same time, I think also that the World Bank has to play a crucial role in terms of capacity development. I still see that a lot of governments have difficulties to deal with the private sector when it comes to infrastructure investment, because you need a lot of knowledge, and the private sector people, they're coming with hundreds of lawyers and highly sophisticated analysis, financial analysis. We are running very complex financial models, and if governments do not understand these issues, then right from the beginning we have a problem, because then the belief is that the contracts negotiated and agreed upon are not fair and transparent right from the beginning. And I think these are two major issues. We would like to see that the World Bank can do a lot, and by doing that they can leverage and open the market for the private sector. Many thanks.
Doing business in Africa. You can't afford to be without Africa Investor.